Hey everybody, my name is Joe Howe. I'm a crypto manager at Crypto Tax Girl, and we wanted to release a video here in December just to make sure everybody understands tax loss harvesting, make sure everybody can utilize it before the end of the year, especially with the current downturn in the market. Tax loss harvesting is something that can save you thousands and thousands of dollars over the years, so it's really important to understand, and it's really actually super simple. So let's get into it. What is tax loss harvesting? Well, it's essentially a fancy way of saying you sell coins that you're currently holding at a loss. So maybe you bought these coins at higher prices last year or earlier this year. Now they're down at these lower prices and you're holding them at a loss. Well, you can sell them and realize those losses. If you don't sell them, they're just going to sit on your books as an unrealized loss, and you're not going to actually be able to utilize them. So it's really important that you actually make the sale of them to realize the loss. And it's also really important that you do this in 2022. If you do this even as late as January 1st, those losses aren't going to count until 2023. So you got to make sure that you do it before the end of the year. Another great thing with crypto on tax loss harvesting is the wash sale rule does not apply. So if you have coins that you really like and you believe in long term, but you're holding them at a significant loss right now, well, you can actually sell the coins, realize the loss, and then you can buy the coins back to maintain your position. Something super special with crypto right now with tax loss harvesting, and something to really take advantage of while you can. So when you realize those losses, what can you do with them? Well, one, you can offset capital gains in the current year. So if you had gains from other crypto or capital assets like stocks and real estate, you can use this loss to offset those gains. If you've got losses in excess of that, you can use that loss to deduct a net $3,000 loss this year and help offset some of your taxable income. Again, you're going to save money on taxes there. And then if you have losses in excess of that, you can roll that forward to future years and then use that loss to offset capital gains in the future year, and again reduce that taxable income with that net $3,000 loss. So super beneficial. You can save a lot of money using this tax principle. And I'll give you a simple example here. So let's say you had a $100,000 loss that you were able to realize in 2022, and you've got a $50,000 gain. Those are going to net out. You're going to have a $50,000 net loss, and you're going to actually take $3,000 and deduct that on 2022's tax return, and then you're going to have $47,000 of losses roll forward to 2023. And as I mentioned again, you can use that $47,000 to offset other capital gains that happen in 2023 and reduce that taxable income with that net $3,000 deduction. With all of this, biggest tips that we can give you is one, know your cost basis for the coins that you're selling, and two, know what tax method you are using. Both of those things are going to really impact the outcome of your transactions and determine how much or if there is a loss on the sale in that transaction. If you aren't sure if you currently have a net gain or loss, or you're having trouble figuring out your cost bases, feel free to reach out to us. We'll do our best to help you out. You can contact us at the link on the screen. It's hello@cryptotaxgirl.com. And like I said, we'll do everything we can to help you guys out before the end of the year.